Greetings traders and welcome back to today's video. In this session, we'll be conducting a higher time frame outlook on the DXY and EURUSD. Our goal is to understand what we can anticipate in this week's and this month's worth of trading. Another reason for this video is to give you guys insights into how I approach my trading. I maintain different logs for various aspects of my analysis. Now, the first log that I look into is my higher time frame analysis. This focuses on monthly, weekly, and daily analysis, which I conduct at the beginning of each week. Now, today's video will focus primarily on the higher time frame analysis, right? The second log that I look into is interest rates. Now, we will not be touching on interest rates in this video, but we'll do so in a future video. And then the third log I look into is intraday trading layouts, which is used daily to keep my charts organized and clutter free, right? So that's the log that I'll use for my trading analysis and all of those sorts of things, right? As an intraday trader. Now, analyzing these layouts separately at different times helps me to stay organized and maintain a clear perspective over the markets. Now, with that being said, let's get into it, right? So the first thing I'd like to talk about is market structure. We know that the markets are driven by smart money, also known as the banks. They are the liquidity providers, while we are the spectators. Central banks own the currencies and set their trading values. With this understanding, we realize that the markets are liquidity based. It's us against the banks. Banks move prices towards liquidity to pair and book against. Now, what that means is essentially this. Take, for example, we understand that at these lows over here, sell stops exist over here, right? Willing sellers at a discount price to buy against. So what the banks will do is they'll push the market lower against these sell stops, right? And they'll essentially buy against these sell stops at a discount price. Now, the process of entering against liquidity, entering an order against liquidity is essentially called order pairing, right? So over here, the banks have essentially order paired against these sell stops. Now, the market will push higher into a premium. The market will draw towards another area of liquidity, right? What resides over here are buy stops. Now, these buy stops are seen as willing buyers at a premium price to sell against, right? Now, that order that the banks had entered over here, what they'll do once the market has reached over here, they'll sell off some of that order against these willing buyers at a premium. And then that's how you start to see the market start to reject lower like this, right? Now, the process of, you know, that process itself is called order booking or scaling out their positions, essentially, right? Or taking profits, right? Now, essentially, that's how the market moves. Now, with that understanding, we then ask the question, where does the most liquidity reside? The higher time frames, right? The higher the time frame, the larger the sponsorship. That's why we'll be analyzing the higher time frames today to gain a strategic edge over the markets. Let's dive into the charts and uncover these crucial insights together. Okay, cool. So we'll be starting on the DXY. This is the monthly time frame. To give you guys a bit of context, we understand that we have been bullish for a very long time until these buy stops were taken over here, right? Now, buy stops or liquidity that resides at these areas at highs and lows will regard that as external range liquidity, right? So after external range liquidity, what you will anticipate the market to do is move towards internal range liquidity. Now, internal range liquidity will be seen as areas such as fair value gaps, order blocks, all of those sorts of things, right? So we see the market drew into this monthly fair value gap. From the monthly fair value gap, what we understand is the market will then move from internal range liquidity into external range liquidity. But understand at the back of your mind that process of order pairing and order booking. All I'm doing is taking that and putting it at its simplest, uh, you know, so that you guys can understand. Once external range has been taken, the market will draw into internal range, which means what? After these buy stops have been sold against, the market will move into a area of discount price or area of fair value where the banks will look to book their profits against. All right. But all I'm saying is, after external range liquidity has been taken, wait for the market or look for the market to draw into internal range liquidity. All right. Now, after that, we see the market drawing into a deep discount area. How do we know that this is a deep discount? We look at our 50% level, right? Whatever is residing below that point is regarded as discount prices, right? So we also see a discount array, right, at deep discount prices, which is our rejection block, right? We understand that all the market is interested in is the liquidity residing below the bodies of the candles, right? That's why this candle over here closed below the body of the candle. We start to see price reject the middle point of this rejection block and price starts to push towards the upside, right? The rejection block itself is also used as an order block, right? It's essentially an order block, right? So we start to see the rejection of price towards the upside. Another thing we pay attention to is the 62 to 79% level. These are levels where you'll start to see most of the time retracements or reversals off of these levels, right? To get an understanding of how to use the fib and what these levels mean, right? Uh, I would advise you guys to watch this video over here, Premium and Discount Price Delivery in Institutional Trading. I will link it to this video, and then for you guys on YouTube as well, I'll add a link over here which will take you to this video, right? It will be very beneficial for you to watch that video because you get an understanding of draw on liquidity, right? So we move from a discount into a premium. What we see over here, this was a fair value gap, which was advocating for price to push lower, right? So we see price pushing lower into discount prices again, where we see price rejecting this bullish order block, right? That results in price having to break right above that or that fair value gap, right? Now, once we start to get that break above the fair value gap, immediately this becomes an inverse fair value gap. And what we expect price to do is we expect price to be supported by this area, right? And essentially, we see that the month of May, June, and July has been supported by this inverse fair value gap, which is advocating for price having to push towards the upside, all right? Another thing we can see as well, this month went as far as to push right to the middle point, the consequent encroachment of the fair value gap, and then we start to see price start to reject that. That is giving us confluence that we could anticipate a further push towards the upside into premium prices. How do we know that these buy stops are at a premium? Relative to this high to that low, we understand that this low has now been formed, right? So everything that's residing below the 50% is discount prices. So we understand that price had been accumulated, or the banks have been accumulating longs and discount prices. Over here as well, we understand that we're anticipating the banks to accumulate longs to push the market into what? Areas of fair value or areas that are above fair value, right? Which we understand what's residing above the 50% level are buy stops. So on a monthly time frame, that is our draw on liquidity. But with that being said, let's go on to our weekly time frame. Okay, cool. So this is our weekly time frame. We are a bit zoomed in price now. We understand that in terms of institutional order flow, we are bullish. To give you guys a bit of context, external range liquidity got taken over here. Market drew into internal range liquidity. We got this heavy volatility towards the upside, right? And then price moves from a further premium, starts retracing into a discount area, right? We understand that this order block is strong due to the fact that when this order block was formed, we got this heavy volatility towards the upside, making this order block very strong, right? Another thing or key evidence that's giving us an indication that this order block is strong is we see our price keeps on pushing, you know, through the wicks, pushing right below that order block itself, but we start to see these heavy rejections of price action, right, which close right above the open price of this order block, right? Even this candle as well, we get that heavy rejection of price towards the upside, giving us an understanding that this is a clear institutional support zone, right? So we start to see heavy, movement of price towards the upside, and then we start to see a rejection or a reversal of price action in last week's worth of trading, right? That results in price having to go where? Into a discount price relative to this low to that high, right? We understand that this area over here, which is our rejection block, which I spoke about earlier, we want to see this area or use this area as a order block, right? So we can see that price is only interested in the liquidity that's residing below this candle's low, or the body of the candle, not the low, the body of the candle. And then what we start to see is price starts to reject that, right? Another thing that's giving us confluence for us having to see price push towards the upside is this fair value gap over here. Price filled it, in fact disrespected it, but now we start to see price starting to trade into it, right? Giving us an indication that we may see price continue higher. Another thing that I didn't touch on, if you note the 62% level, this week's worth of trading, the low tapped into the 62%, and then what we start to see is a rejection towards the upside. Like I mentioned, the 62% level is a very strong level, right, where we can anticipate reversal of price action, and we can then see price having to push towards the upside. So on a weekly time frame perspective, we understand that the draw is towards the upside, right? But with that being said, let's look into our daily time frame. Okay, cool. Now what we see on our daily time frame is these lows. We understand that what resides below that point are sell stops, right? So we understand that the market had pushed right below these sell stops, and the banks are going to look to order pair against these sell stops, right? But what's important as well is this fair value gap over here. We can see how price in Friday's trading closed right below that fair value gap, which basically violated it, right? But then we see in Monday's trading, the candle closes right back into the fair value gap, and then as well as Tuesday's trading, right? So it's giving us an indication that this fair value gap is being respected, and from this fair value gap, we can then anticipate further bullishness towards the upside. Another thing as well, Tuesday's candle, right? Closed, or we start to see price trading right above that candle's high over there, right? Immediately that gives us a change in state of delivery, implying what? That this candle over here, this bearish candle, should then or should now be used as a bullish order block. So potentially over here, we can see price being supported and most likely pushing towards the upside. With that being said, let's go into EURUSD. Okay, cool. So we are on the monthly time frame. We'll start moving a bit faster. We can see that over here, price pushed low. We took out the sell stops over there. We move from a, external range liquidity. We want to see the market at least push into an area of fair value, 50%. We also want to see the market push right above that. We see the market pushing into this premium array over here, which is the monthly fair value gap, which gets completely filled, right? We understand as well what's residing above these highs, right? Buy stops at a premium price above the 50%. What will the banks look to do? They'll look to push the market right above there and then enter their order, which will result in this heavy rejection. So what do we understand? If we've sold at a premium, we want to look to book our profits against sell stops at a discount. What's residing below the 50% level? What's residing below these lows over here? Discount sell stops, right? So that's how we see the market push into that area. External range liquidity gets taken. The market then draws back into a premium rejection block. We understand that off of this point, the market or the banks are only interested in the liquidity at the bodies of the candles. We see that we get a rejection off of that area over there. The market goes back into a discount. This is a fair value gap which gets tapped into, right? The market goes back into a premium. or the area of fair value, we get a heavy rejection again towards the downside. This gives us a market structure shift, indicating that in terms of institutional order flow, we may be continuing bearish, right? We also understand that sell stops exist over there, which is external range liquidity. So from external range, the market goes into internal range, right? This rejection block, we can see how price has been tapping into the mean threshold, which is that middle point, tapping into it, but rejecting it, right? Closing right below it. So this is giving us an indication that this is a strong institutional resistance zone, and we could anticipate further bearishness, right? So with that understanding, we understand that this high over here has been established as a long-term high, and potentially we can see bearishness, right? So if marking our fib, we understand that everything residing above the 50% level is at a premium, and everything residing below that point is at a discount. All of these arrays are considered as premium arrays, or areas where we want to then sell against at a premium, or we want to then see the market then draw into an area of fair value and an area where price is at a discount, right? So a discount array that we see over here is this fair value gap, right? Areas of fair value is where the banks will look to start booking their profits, right? So that is our next draw on liquidity on the monthly time frame. So that being said, let's look into our weekly time frame. Okay, cool. So we zoomed in on the weekly time frame over here. We can see that price action relative to this low, that high to this low, price pushed into a heavy premium price. Note the numbers, right? And then what we start to see is price pushes lower into a discount price. Price over here as well then gives us a push into further premium prices, right? Which is where we are at now. So off of these regions over here, we'd like to expect rejection of price action towards the downside. What we see over here, this is a rejection block at the moment, right? We can see that price action is starting to reject this area over here. We are at a premium, which could give us an indication, if price is not looking to go into a further premium, that this area over here would be a area where the market would then push into further discount prices. Now, in terms of a weekly time frame perspective, where would our draws on liquidity be? What we understand is relative to this low, to that high, right? What's resting below the 50% are discount sell stops, right? So we are at a premium at the moment, at premium arrays. Therefore, we'd like to see the market draw into discount arrays where we see these relatively equal lows, right? We understand that sell stops exist down there at a discount. So on a weekly time frame, that is our next draw on liquidity. With that being said, let's look at our daily time frame. Now, relative to our daily time frame, we're noting this high to that low over there. What do we see? In this week's worth of price action, or in fact last week, going into this week, we got this heavy retracement towards the upside into premium prices. We're above the area of fair value, right? What do we see? This area over here is a rejection block. What we got on Friday's trading, price traded right above the middle point. But then in Monday's trading, we start to see price reject that middle point over there, right? As well as Tuesday's trading, we tapped into the mean threshold, but then we close right below that point. So it's giving us an indication that this area over here could be a area where we start to reject price and continue towards the downside. But now we are anticipating CPI as well. We are seeing that there's still a likelihood of price also having to push into a further premium because these are relatively equal highs. Price could take the buy stops over there and then continue lower. But at the moment, what I'm seeing is this area over here, it having to hold, and then me having to see price push into a further discount, right? So that is what I'm looking at the moment. I'm looking at price having to respect this. This is both a rejection block and a breaker. A breaker is essentially this area over here, right? So this area over here, what price is looking to do is price is going to mitigate the buy orders that the banks had filled over there, and they're going to reinstate new selling. So this is a heavy resistance area, right? But with that being said, best regards, the architect.